I know there's a lot of first-time buyers out there who are a little worried, apprehensive about the different options that are out there. So today we thought we would talk about that first-time home buyers incentive. That program originally came out a while ago, but lately it's been tweaked and it's been improved a lot compared to what it originally started at. In the simplest way to look at it, the government essentially is offering a shared equity loan as a first-time home buyers incentive. And what happens is that there are no ongoing payments for that portion of the loan. So let's say you already have 5% down. If you have 5% down and you're buying a pre-owned home, the government will give you an additional loan, again with no interest, no payments for the term that you have it, and for another 5% if it's pre-owned. And if it's a new property, you can take the option of either 5% or 10% in that free home loan situation. So it's a really good solution for people who, let's say, are, for example, really tight on their debt servicing ratios. So you've got, let's say, a couple other payments and you really don't want to increase your payments a whole lot. This additional money with no payments required for it really will help your cash flow tremendously. The other advantage, of course, with it as well is the fact that, hey, you don't have to come up with that money up front. So that's fantastic. Bottom line, who qualifies for these types of programs? Well, if you're living in, let's say, in any other part except for Toronto, Vancouver, or Victoria, the maximum income, household income you can have for the applicants is $120,000. However, the good news is if you live in Victoria, Vancouver, or Toronto, you can have $150,000 of household income, which allows you to still qualify for this program. Now, another couple of things you must bear in mind to get this incentive. The home must be your principal residence. You or your partner must be first-time home buyers. And to qualify, like I said, you must at least have the 5% down. And don't forget, any property over $500,000 requires you to have 10% of the balance thereafter over 500. But again, up to the 500,000 mark, it's only 5%. And of course, that 5% of yours can come from a variety of things. For example, you could have it from your RSPs. If you have TFSAs, you have, let's say, stocks, anything you have, you can utilize. And if you have family or friends who are generous and they want to help you with that, absolutely, you can utilize that too. The other thing is you must be a Canadian citizen, a permanent resident, or have legal authorization, in other words, a work permit to work in Canada if you are a non-permanent resident. So even if you've got the right type of work permit, there's some options there we can explore as well. And the other thing to keep in mind is this is for an insured CMHC mortgage. In other words, your overall down payment has to be less than 20% down. So, for example, you could have 9% down of your own money, be looking at a brand new condominium, take advantage of the 10% with the home free loan, and now that you've got a 19% down payment, as long as you've got less than 20% down, you're eligible for this. So the other thing to keep in mind is, how do you know if you're a first-time home buyer? Who fits that criteria? Well, number one, you've never bought a house before. Next, in the last 4 years, you did not live in a house that you, your spouse at the time, or your common law partner owned. Third, you experienced the dissolution of your marriage or common law partnership, even if you don't meet the other prerequisites for the first-time home buyers program. So there is a variety of things, and if you are married or in a common law relationship, you may be eligible still for the first-time home buyers incentive with the 4-year clause, even if you have previously owned a property. Bottom line, I know it can seem a little confusing, but we can connect you with the right people who can answer your specific situation and make sure that you qualify. Bottom line is it's a great opportunity for you to get into the housing market, especially for those people who don't have that down payment. And there's lots of, like I said, lots of lenders we work with that utilize this program. And the other neat part of this is if you're a first-time home buyer and you're purchasing a property and it's your, like I said, your principal residence, you're going to be living in it. If you're under $500,000, you are exempt from property transfer tax, which is another real bonus. Or if the property's brand new, up to $750,000, not including GST, again, that property is exempt from property transfer tax. So there is a lot of pluses and a lot of pros to taking advantage of it. Now, as far as credit requirements, It's going to be the standard credit requirements that the lenders have, CMHC. So we are looking for people with reasonably good credit. It may be like, whatever your credit score is. If you're worried about what your credit looks like, get a hold of us. We will take a look at your situation and we can help analyze if this is the right fit for you. I know, like I said, it's pretty tough times right now for first-time buyers. There's not easy to get into the market. And one of the common complaints I hear all the time is, hey, I don't have enough of a down payment. But like I said, as long as you've got that minimum 5%, you're under $500,000 purchase price, we can take a look at the grid, see if you qualify for that additional 5% for a pre-owned property, or like I said, for a new one, either 5 or 10% additional. Now, the other thing to bear in mind is you're only required to pay this loan out in a couple of circumstances. Number one, you sell the property. Obviously, that makes sense. That loan gets repaid back. And there's a formula to look at whether the property appreciated in value or declined. And the government has kind of a formula, and it's a little hard to explain over this video, but we can look at it and run some examples for you and give you a couple of links to where the examples are. And you'll see how the government is either going to participate in some of the gain or participate in some of the loss. So that the program's flexible that way. The other thing is if you refinance your property, that loan would be required to be paid out. However, if you are still continuously keeping the property and you're just renewing after 5 years, your mortgage is up for renewal, so long as you just keep motoring along and you're not looking at doing anything different, not pulling any equity out of the property, you just want to keep focusing on paying it down, this loan will stay in place. And like I said, the best part, interest-free, payment-free. And there's not a lot of places that you can get that these days. So let's pretend that you bought a property for $500,000. That 5% is $25,000. You will get a $25,000 interest-free, payment-free loan. Not only that, but because you have additional down payment now, your 5% plus the home loan 5%, you will pay less CMHC fees as well, which is ultimately going to save you even more money. So, best place to begin is get a hold of us at the Auxilium team. I mean, this is what we do. We work with a lot of first-time home buyers. Get a hold of us. We'll be happy to send you our first-time home buyer's guide. We've got a whole booklet we've written on this sort of stuff. The other thing that we can do also with you is plan for the future. You may not be in a position where you can buy today. It may be 3 months, 6 months, 9 months. You may have to do a variety of things. But we are happy to work with you, get a game plan in place, so that way when you're finally ready, we can make your dreams of home ownership come true. So lots of flexible options, lots of ways that we can take a look at this situation for you. And it could also be that maybe you're looking at a property that's currently under construction. It's going to be ready in a few months. Well, we can tie it in with this program, take a look at how your income fits. And remember, that income number is very important. The maximum household income your family can have to be eligible for this program is $150,000 combined if you live in Victoria, Vancouver, or Toronto. Now, if you lived in Kelowna, $120,000 is the maximum number. But again, that's going to be based on your gross income, not your net income. If you're self-employed, again, it's going to be based on what you're filing, that sort of stuff. I think that pretty much sums up most of the details on this program. If anybody's watching that has any questions, we'd be happy to kind of take those at this point. But like I said, the best way to do it is to get a hold of our team, look at your individual situation. That's most important. There's very few Canadians that are really taking advantage of this first-time home buyers incentive. It's a great program. And then when you couple that with the eligibility with your RSPs, because again, if you've got money in your RSPs, you can pull those out to utilize for your down payment as well. And like I said earlier, if you've got family that's willing to gift you part of the down payment, totally workable under this program. Some of you might even have a tax-free savings account. Whatever it may be will work. And like I said, if you're a first-time home buyer, never have owned before, you're also under $500,000 exempt from the property transfer tax. So it's a really good time to be looking at considering getting into the market. I know interest rates are high, obviously. The question I get asked all the time is, when will they drop? I wish I knew. However, I think that what we're seeing is that given with this incentive in place, there is lots of benefit still, and the overall cash flow is really good. We ran some recent examples where because of the home loan incentive, people were able to, in some cases, have $300-400 less a month towards a payment. So that made a tremendous difference, especially if they were carrying other debts. So any questions you have, like I said, never hesitate, let us know. I think that pretty much sums it up. So I'll just recap again really quick. First-time home buyers incentive. The incentive that's being offered is 5% on pre-owned homes. You can take 5 or 10% on new properties. Your income requirements, your income maximums is $150,000 household income if you live in Victoria, Vancouver, or Toronto. If you live in any other area in BC or the rest of Canada, it's $120,000. Again, it's you and your spouse, you and your partner to be deemed to be first-time home buyers, and it's got to be your principal residence. It can't be for a rental. You and your partner, obviously, like I said, a simple rule of thumb, if you look at your income, the formula they base it on, if you live in Victoria, Vancouver, or Toronto, is 4.5 times your qualifying income. So that's the maximum amount you can borrow, not including your down payment. So again, we'd be happy to walk through it. Is there a likelihood that you would get a loan without currently being employed but have funds to afford a loan? Well, you know what? It really depends. In order to get a loan without currently being employed, the only lenders we have would be alternative lenders. However, they'd want to see your strategy of how, what the future plan would be, so you don't take on something that you can't afford in the long run. But if you have got a specific situation, as long as you've got at least 20% down in that situation, it would be the minimum. More than likely, lenders would want to see you with 35-40% down, which I know is nearly impossible. But sometimes we get clients who got an inheritance, or they're in between careers, or let's say they had a spousal separation and they're waiting to get new employment. We've got a variety of options because, like I said, we've got the mainline traditional lenders, we've got the alternative lenders, and we've got truly private lenders as well. So hopefully that answered your question there. If there's any other questions, throw them out. And like I said, it's Auxilium team. We've been here for a long time. We've been opened up our offices in 2011. So we have now been in business here 12 years. We funded over $800 million in mortgages, over 2,000 mortgages funded. We've got lots of 5-star online reviews. Please read them out, check them out. That's really important. I mean, I can tell you what a wonderful team we have, but honestly, it's up to you. Do your legwork, read the reviews. You'll see what our company's all about. We specialize in all types of lending. Like I said, we work with a lot of first-time home buyers. Get our first-time home buyers booklet. We've written a whole book. It's jam-packed with information. We'd be happy to send it out to you. Just reach out to us and we'll get it out to you. We work with all the major lenders. We work with all the traditional lenders, the banks, the mainstream lenders. And we work with a lot of monoline lenders as well who specialize in different aspects of lending and have different options. The other thing to keep in mind, and I'll just point this out too, sometimes we have people who spend a lot of time and they're subscribed to different credit services, like, to just monitor their credit rating and that sort of stuff. While you may see a score there, it may not be the same one we see later when we pull your actual credit. There can be some differences. So that can either be positive or negative. I know some people get dismayed when they see a different score, their score may be lower, but get a hold of us. We can take a look and get an accurate reading on where your file's at if you're ready to move forward. And the other thing we do at Auxilium is we do what's called a hard pre-approval. Initially, when you call us, how our process works is one of our team will talk to you, we'll get your information, we'll round everything up. If there is absolutely, let's say, something that cannot be done today at all, and maybe 6 months, a year, 2 years out, we don't necessarily have to pull your credit at all. We can leave it alone. Our experts, our team already knows how to look at your situation and give you good advice on the best way forward. Now, if you're one of those people let's say wants to move forward fairly quickly, you're like, hey, I'm ready, I just want to get this done, I really want to kind of do this, we'll do a hard pre-approval. We'll not only round up all your paperwork, we'll pull your credit, we'll look at the whole situation top to bottom. And I would say that 99.9% of the time when we do that, once we tell you what you're approved for, you're good to go. And that can be for quite a while because, again, we do all the effort of looking at your entire situation. We don't just have a casual conversation or, kind of do it half-assed, because that's not how we like to do it. We'll commit to it. We'll do the whole process so that way you can go out there with confidence in the marketplace. And you know what? When you fall in love with a property, it can happen. Anyway, I really appreciate you folks watching this live thing. We've done it for the first time. If you've got other topics you would love us to cover, if there's anything else you're like, hey, I'd really like to know how this aspects of mortgages work, or how this works or that works, please let our team know, and I'd be happy to do another one. And again, next time we do one, please tell your friends, family, anybody else that you have. And once we've covered off a variety of different topics, we will obviously keep them, and you can access them later. Our goal at Auxilium is we want informed consumers. We want people to be financially literate so that they should understand how these processes work. Mortgages shouldn't be a mystery. None of this should be that. It should be clear. It should be transparent. It should be something you understand. And you can, not wonder how the whole process works. You should understand it from beginning to end. So that way, when you're, in that process, you take on a mortgage, you know exactly what you're signing up for. Anyway, thank you for watching, and I will see you next time.